Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'll be taking you through the snapshot for today. Give me a moment. Okay, so you're almost welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and today is the 3rd of April 2024. And we've been having quite a lot that has been happening in the markets. And of course, what has been on the minds of most of us has essentially been gold, and what gold has essentially been up to over the past few days. So we've been having quite a lot that's been taking place, especially on the back of a rising precious metal. And of course, the reason for this has majorly been because of the rising geopolitical tensions that we have been seeing in the Middle East. Plus also, just this morning, we also got some news coming in that there was a tsunami that took place in Taiwan, and there have also been warnings that have been issued of course, to other countries such as Japan. So, of course, the markets are currently on a bit of tension, and it could be one of the reasons why we are seeing that, push higher on gold. So, what we're essentially seeing and what has been happening for the past few days in the markets, I would characterize it as a gold rush, where we have been seeing a lot of flocking to the precious metal, not really on the back of demand off of it being a risk on asset, but majorly also on the back of the tensions that have been happening around the world from the resurgence of the tensions between the IDF, which is the Israel Defense Forces, and Hamas, and also what we have also been seeing with some of these things like what I'm showing you right now. So, of course, this is more like a disaster as opposed to a geopolitical tension, but we have a mix of things that are really throwing in sentiment and, of course, pushing that narrative for demand for the precious metal. So, something I also discovered is that when you come and look at all the commodities that we have actually been, if you look at all the commodities collectively, you notice that actually most of them are trading at record levels. Brent crude and of course crude oil have not trading at record levels, but actually have been steadily rising. And of course, we are seeing that this kind of move has been affecting a lot of commodities like cocoa, like orange juice, that are reaching record levels. Now, looking at the forex market, we are looking at a lot of unchanged pricing as of week to date, and of course, that unchanged pricing has majorly been because of the expected NFP numbers that are going to be released sometime later in the week, and we're expecting to see what comes as a result of the data. If we see sharper increase on NFP numbers, then it's likely that we're going to see Euro USD and GBP USD continuing their descent like they have been moving for the past week. The indices are also looking fairly bearish. And of course, for those of you that maybe were in the market on Easter Monday, when the US markets were open, you notice that Dow Jones actually had a very sharp drop from about 40,000. And of course, that move upwards was an empty volume move. So empty volume moves at times when the market will move, but when there is no active volume or when the volume is very slim. So we saw a lot of markets rising, such as gold, which of course is starting to pull back steadily today. We are also seeing that the markets, such as the indices, especially Dow Jones, also where we saw that it also had a very sharp move to the downside on the back of that empty volume. So yesterday, when the US market opened, we saw that the Dow Jones also intensified on its downtrend, and it's still trading at lofty levels, but we have to wait and see what comes as a result of things this week. Bonds across the world, and of course, looking at the ones in the US and in the UK, most of them have been steadily trading upwards. And of course, this has been on the back of that push back on the rate cut narrative. Cryptos are also recovering a little bit, possibly taking on their mantle as safe haven assets. So looking at the economic calendar for today, we do not have really that much that we can expect. But of course, the major focus for today by traders is essentially going to be the data that is coming in the afternoon, which of course is the ISM non-services PMI, but most importantly, the ADP data. The ADP data is going to be released at about 3:15, and what traders will be focusing on for that data is expecting to see how the employment data has been, and of course, how it fared for the month of February. If you look at the JOLT numbers that we got yesterday, you notice that the JOLT numbers were a little bit mixed, and we got mixed reaction from the market, whereby we saw that the DXY intensified higher, and it could be this was as a result of the numbers. Of course, yes, they were slightly lower, but trending very well here. So I think this is just essentially an indication that we can expect to potentially see, the NFP numbers could also point to a strong upward move from February. So looking at ADP, what we can expect today is that we are most likely going to see a sharp sell on the risk on assets, which of course have been selling since the start of the week. We are also seeing that gold is also steadily declining so far this morning. And I'm expecting that if we get a strong ADP number here at 315, possibly above 150, 160, that is really going to seal it for the dollar, and we could expect to have a much higher DXY index, especially as we go into tomorrow, Thursday. Keep in mind, guys, that today is Wednesday, and tomorrow is Thursday, and NFP is coming out on Friday. So we had Easter Monday, and because of that, the market week is relatively short. So we expect at least today and tomorrow is going to be very key days for how the markets play out. And of course, on Friday we shall have a breakdown for the NFP, because I'm going to be with you for the Friday snapshot. So we shall have a nice breakdown for what you can expect for NFP. On Monday we got the manufacturing PMIs. These PMIs were released at about 5 p.m. and we saw that there was a really nice reaction on the dollar, because the PMIs came in above 50, indicating to us that strong resilience of the US economy, especially on the back of the manufacturing. Now, services is also going to give us an indication of what we can expect, especially for the dollar, and it's also going to direct us on how the market is going to evolve over the course of the coming days. Now, we also have crude oil inventories. The crude oil inventories have also been steadily increasing. However, despite that, we're also seeing that the oil prices have also been rising. So I do not know whether we are in some kind of a frenzy for commodities, because every single commodity, you name it, most of them are actually rising. From orange juice to most of you that are chocolate lovers like cocoa, heating oil, all these things are all rising. And I do not know whether it's on this back that even oil is also benefiting from that rally. But we have to wait and see what happens over the course of the next days. So that's pretty much it, what we can expect. We're also going to have Fed Chair Powell speaking. However, just maybe to inform you guys that whenever Fed Chair Powell speaks, sometimes do not monitor the time, because I'm sure most of you are expecting that the market is going to move at 10 past 7, simply because it's saying here that's when he's going to speak. Sometimes Fed Chair Powell releases what we call a pre-released statement. So the statement comes out first and then he speaks. So you need to make sure you're checking on your different news sources, such as maybe Financial Juice, the one that I use, it's very reliable. Or you can check on sites. You can also watch Bloomberg, it's also reliable, so that you can get some of those comments before Fed Chair speaks. Yeah, so that's pretty much it on the calendar. Looking generally at the news for today, of course, the major thing that has really hit the markets, of course, has been that reaction from Taiwan, and we are seeing that most of the indices are actually in the red as of today. And I think that bearish trend and bearish trades are going to continue, which would allow traders to be able to benefit with sales. So I think that's really it. So we're going to cross over to the charts and go over the charts and see what's happening over on the charts. If you have any questions, kindly send in your questions. I'll be happy to have a look at them. Okay, so let's cross over to the MT5. Okay, so we are starting with the Dow Jones. This is what the Dow Jones is looking like at the moment. So the Dow Jones is a very interesting asset. And of course, for most of you that have been at least, monitoring or watching my snapshots, this is essentially with what we have been having with us with the Dow Jones. So where you see this arrow right here was the day of the FOMC. And you saw that actually the FOMC was actually able to take the Dow Jones all the way to this level here. So we had a descending triangle that was formed at that particular point up there. And a descending triangle actually sent the Dow Jones skidding very strongly to the downside. So soon after we had that move to the downside, we saw that we had an empty volume move that was on, I think, Thursday. Of course, Thursday was Holy Thursday last week, and by that time, market players had essentially cut back most of their speculative positions. And when the market opened on Monday, Easter Monday, we saw that there was actually a very sharp sell after that we had that descending triangle. So right now at the moment, what we are seeing with the Dow Jones is that we have a descending triangle and we have a bearish pendant. These are signs of bearish momentum, and we have also been able to come and feel price action within this volume imbalance right here that we had on the 20th of March, the day that we had the FOMC. So I think the Dow Jones is still in a steady downtrend. We might get a little bit of temporary bullish momentum on the back of some profit taking. However, I think we are going to continue in a downtrend. And should we get fairly strong NFP numbers, or if we see that seasonality kicking in April, when I mean seasonality, this is what I mean. In April, most times traders will normally cut back on their long-term positions, and they will normally get back into the market sometime around June. So I'm thinking we should see that seasonality kick in for the indices, and it will then allow the Dow Jones to potentially sell lower. Now, today's ADP report is going to be key for what happens with the Dow. Right now, the Dow, I think, is forming as a bullish pendant that would allow it to potentially range within here. And should we see a break of that pendant to the upside, but potentially breaking above that line box there that I drew, we should see some demand kicking in and taking it back higher to create a short-term higher, rather lower high, that then will open up the way for NFP on Friday to take it even lower. But for now, it has paused in the selling, and I think it's going to hold that level and potentially buy. However, if we get a break below this level here, then we're going to continue our downtrend, and we're going to be aiming for pre-FOMC levels that are somewhere within this level of 38,800. The Dow Jones at the moment is looking fairly bearish, and I think that bearish momentum is likely to continue, possibly taking it lower. Now, looking at the Nasdaq, yesterday the Nasdaq had a very nice setup in the form of a bearish pendant, and of course that bearish pendant was a very good setup for a sell. We were able to discuss it during yesterday's class. For those of you that were, some of you that might have been in the class, and we saw that actually we had a very nice pullback on the Nasdaq all the way down this side here. And at the moment, the Nasdaq is looking relatively bearish. We had Tesla Tesla released its deliveries for Q1, and there was actually a big miss on the deliveries, which of course saw Tesla selling as much as 6% in the pre-market. That was before the open yesterday. So one of the laggards that affected the Nasdaq yesterday was Tesla, and I think even today we are going to continue to see some relative weakness. The tech index is looking mighty bearish at the moment, and it's likely that we might continue to see it breaking levels to the downside, where we might see it achieve these pre-FOMC levels somewhere around here. So one of the key catalysts for a move down on a Nasdaq is going to be the demand or the price action for today. But we also have to see how it fares within this area here. If we see a break above that level, then we can potentially see the Nasdaq trading higher and maybe creating a lower high within this area here. However, if this doesn't happen and we see a nice break of structure with a very nice print price action in the form of these full body candlesticks, then I think that's going to open way for the Nasdaq to continue selling, and we should see it potentially heading back to where it was on the day of FOMC. Now, keep in mind that FOMC was just on the 20th of March. So what that means is that it's still trading relatively at I would say close to record levels. So we have to see how it fares. However, the probability is more on the side of a sell rather than a buy. Now, crossing over to gold, gold is a very, very tricky asset at the moment to look at how it's trending. But what I can say for it is that it's stuck in a very, very nice uptrend. And of course, if you recall last week when we met on Wednesday, I provided you this descending triangle right here. So we had a very nice descending triangle that formed on gold. It formed around the 25th of March. And I can just change this to black so that it can be more visible for your eyes. Okay. So soon after we were able to break out of that descending triangle on gold, which of course is a bullish sign. Okay. It typically appears in this kind of way, something like this. And you normally have price moving up, from an uptrend, makes some kind of a pause a temporary pause in movement, and then it continues. Okay, so this right here is what we had on gold right here. Okay, and you saw that actually immediately when gold broke above this level, which had been a very, very tricky area for it, it immediately started moving very strongly to the upside. Okay, so at the moment, gold has found resistance at this level right here of 22,087, and it's going to be a very tricky level for gold to break. I think this is going to be the temporary top for gold, and we should see it resuming downtrend. So the downtrend is going to be very key, especially at this level right here, where I have my arrow, because that was the last level of structure that gold was able to break. Okay, we had a liquidity sweep right here, and of course when we had that sweep, we saw gold breaking very nicely and now topping at this level right here. So if we see gold retracing and potentially testing this level around here, so if we see gold testing this level of the golden ratio, which is somewhere around, let's see with micros here, it's somewhere around 22,064. If we manage to reach this level on gold, then I think it's going to open up gold to move possibly lower, and we should see it potentially retracing its move. Now, keep in mind that gold is looking fairly overbought on different indicators. If you're using RSI, if you're looking at some of the moving averages, it has found temporary resistance, and it might weaken from this point, possibly back here. Now, if we fail to see gold breaking this level of 22,086, then it will then allow gold to start its temporary descent that could then allow it to create a temporary bottom before it starts moving higher. But at the moment, gold is looking mighty bullish, but keep in mind that bullish momentum does not stay there forever. Okay, it will always at least resume with some kind of bearish momentum. The buying never stays forever, guys. I think you're aware of that. Okay, we only see a bit of buying temporarily before we see some selling kicking in. Now, looking at USDCHF, USDCHF is looking like this at the moment. Last week we saw it on a steady uptrend, and it has actually still kept that uptrend. We have also been seeing that even on the back of a rising precious metal, precious metals such as gold and also silver, we have also been seeing that the USD pairs have also been steadily rising. Now, the reason why USD CHF is a very good pair for you guys to trade is simply because what is supporting it on a move higher is that anticipated rate cuts that are going to come from the Swiss National Bank. So what I expect from this particular pair is that we are going to see potential uptrend as we go into the rest of the week. However, the uptrend is going to come with temporary pullbacks. But I think USDCHF is a very nice pair if you're looking for nice trading to potentially take it higher. So that's it really from me. I've gone through the more important things that you can focus on. Now, I know some of you might want to look at Euro USD. So for Euro USD, I would say it's currently tricky at the moment to analyze, and of course the reason for that is because we are seeing that slight pushback higher on risk on assets where they are kind of they are potentially looking like they want to resume their uptrend. So we are seeing that pause in selling for Euro USD. Now, another thing I want to mention about Euro USD is that it might be tricky for us to tell how it's going to fare, possibly around the time of how it's going to fare as we go into the NFP, because it looks fairly overbought, and it's going to be tricky for us to tell where it moves from here. But I suspect that we could potentially see a downtrend coming in, or we could potentially see some steady uptrend that will then allow us to create a potential high as we go into NFP. So I think right now might be a good time for us to look for scalp buys on Euro USD, possibly taking us higher. If we get a weak ADP number today, then I think we shall then look for buys for Euro USD and look to buy it potentially back to that 50% fib level on my H1 time frame around 1.08034. Now, should we achieve this level, then I think we can then resume to look for some sales for Euro USD back to that descending channel that it's been in for the bigger part of March. GBP/USD is not looking any different. If you look at it on the H1 time frame, you notice that it had a temporary move above its descending channel, and at the moment it's still looking relatively bearish, but right now might be a good level for you to start buying it as it steadily gets off that key support level that it was at around the 1st of April. So we should see a steady uptrend for GBP/USD, just like I'm also expecting one for Euro USD. Should we see it move higher, then it will likely achieve a temporary top that will then allow it to sell towards the day for NFP. So that's really what I have, guys. If you have any questions for me, now may be the time for you guys to ask your questions so that I can handle them. Question time, guys. Best pair to trade today and the week. Okay, so my best pair to trade today, pair. That means you're looking for a currency, Trepsked, huh? You're looking for a currency. Okay. Currency. Which one can I provide to you? Okay. So when I look at Euro USD and GBP/USD, one thing comes to mind. Um, Euro USD and GBP/USD would have been good pairs to trade, but the only thing is that they're having extremely choppy price action because the main catalysts for their movement this week have not yet arrived. We are waiting for NFP. We're also waiting for ADP. So until we finish with those particular events, I think it would be really tricky for us to point on any trades at the moment. Now, for me, what I can advise as the best pair to trade today, I'll be looking at USDCHF. I would expect that for USDCHF, we can potentially look for some scalp buys to the upside on that steady uptrend that it's on at the moment. Now, for the week, I would go with gold without a doubt. I think gold is going to provide us really, really nice opportunities as we go into the NFP. I also think that gold's temporary top is in at that level of 22,085. I do not envisage any more uptrend for gold at the moment, simply because I think or I feel like gold has already priced in every single um, it has priced in what I can say, whatever it is that's happening right now in the world. We have a tsunami, we have the tensions between IDF, which is the Israel Defense Forces, and Hamas. I don't think there's anything else that is going to affect gold even more than now. So we should see at least a push back on gold sometime within the week. So for gold, I'm really looking at it as a swing play more or less than intraday play, because just like as you guys can see, its price action is a little hard to read if you're looking at it on a typical trading day, because it's highly unpredictable. But what I can say is if you're approaching it in terms of a swing, then you might be in a position to be able to get some trades. So USDJPY, USDJPY, I don't have any plays on it at the moment. And of course, the reason for that is because it's extremely choppy. As you guys can see, it's been in a range for the bigger part of mid-March all the way up to the end of almost the beginning of April. So we're stuck in a range, and the range is going to continue. Either we are going to break below the range, or we are potentially going to break above the range. So at the moment, it's just one of the two. If we break below, we look for a sell. Break above, we look for a buy. Yep. So that's what I can advise for USDJPY. Any other questions, guys? Hello, Norbert. How's Kampala? Kampala is fine. Rainy. We were having a bit of heat wave last month, but I'm really, really so happy that it seems the heat waves have now come to a pause, and we are now seeing at least some rain in Kampala. So, yep, I can't complain. I hope you're doing great, Lamek, and everything is moving great your side. AUDUSD, again, guys, I have absolutely no analysis on this pair. But what I can say is you might want to wait for a catalyst such as the NFP, which is going to be on Friday, and you might want to use stop orders, whereby in case we get a very nice strong NFP number, then we should then see the steady decline for AUDUSD and potentially see it trading lower. So looking at AUDUSD, we seem to be in a nice descending channel, almost similar to the one we're having on EURUSD and GPP and AUDUSD and GPP USD. So I think we are going to expect the same possibly going into NFP, and we can expect that there's going to be a potential continuation of this downtrend. So just keep an eye on it and see what happens there. But we are actually in a steady decline, and this is likely to continue. Okay. So UJ, I've handled it. USDJP, I think I'm done with that. Any other questions, guys? Any other questions? EURCHF, I don't have it on my watch list, so I can't really advise on it. Yeah, I don't have it on my watch list. I can't advise on it. However, it should be in a steady uptrend on the back of that rising the declining CHF. DXY is also in an uptrend. Okay. If you look at DXY, it's also on an uptrend. Let me see. So we're just going to look at DXY very briefly as we wind up. So okay, so for DXY, we're in an uptrend on it. Okay. I think you can see the uptrend that we have been in from the bigger part of the end of March, and that uptrend is still intact for the DXY. So I'm expecting it to continue moving higher. We should see it potentially testing these highs of 106. Okay, yeah. So DXY is still majorly bullish, and my view on it has not changed. Okay. Yep. So unless there, if they unless there's maybe a few more questions, I think we can call it a day, guys. And I wish you all happy trading. And yeah, someone is asking, I'm not able to set and use moving average on my MT5. How do I do it? Yeah, so when you're adding your moving averages, just simply go to your MT5 on your phone. And once you're there, go to your chart, okay, the MT5 chart. When you get to the MT5 chart, what you're going to do is that you're just going to simply come and click on the F symbol. There's an F symbol. It's shaped a bit like an F, okay? Okay, so you're just going to simply go there, and then you're going to click where there's the main window, okay? So you click the main window, and the main window will reveal to you different indicators, okay? That's if you're using your phone, right? You'll be able to see very many indicators. Lamek, I don't know, you're trying to say it on your MT5 for the desktop or for the phone? Because we have different applications. So which one are you trying to set it on? Is that the phone or on the a desktop? Lamek, just kindly guide. Are you trying to set it up on your phone or on the desktop? For the desktop, okay. For the desktop, let's just have a look at it. Let me just show it to you in a bit here. So for the desktop, we can go to the MT5. Yeah. So let's say I don't have my moving averages. Okay. So I'm going to come here and move them. Uh, delete. So my moving averages are gone. Okay. So I'm just going to come right click. So you right click your mouse and then you go to indicator. Oh, my bad. Sorry. You go to view. Okay. Now you go to insert. Sorry, you go to insert, then you click indicators and then you go to trend. So moving average is a trend indicator. So you're going to find it right there. So when you click moving averages, you're going to come and add them. Now for me, I usually add 200 day and 50 day. So you come and select the period you want to add it for. So it could be maybe 14 day if you're using it for short-term trading. And I usually like to use exponential because exponential smoothens out price faster. So it's more reliable if you look at using it for trading. So you select the color you want and then you click OK, and the moving average will be automatically added on your chart. Now you should have two moving averages, one that's shorter period and one that's longer period. So you might want to look maybe for like 50 day and the 200 day, and you use them concurrently. So when the 50-day moving average when a 50-day moving average, it's lagged, you're going to see it. It's lagged. You're going to see it. So when the 200-day or the longer period moving average crosses above the 50-day moving average, that is actually a buy, rather a sell. And when the 50-day crosses above the 200, that's a buy. So that's how you use the moving averages. For instance, now like mine, this is if I add my template, okay. Okay, I can't add my template because it will mess up my chart. So I need to add a new moving average right here. So this is 50. It's blue. Click on it. So I've added both of them. Now, if you look at gold, you notice that gold had a crossover right here, right at this point, right here at this point, okay? So the 50-day crossed above the 200-day, and you can see right after that point, we actually saw gold steadily rising, okay? We saw it steadily rising, and we saw it moving higher. So because of this, it's now a buy for gold, and I suspect the reason why we are seeing gold moving quite higher like it's doing now. So that is really in a nutshell how you use the moving averages. So for more reference, you can also visit FX Spacer's YouTube channel that has information on a lot of those different things that you can use when you're doing your trading. So that's it from me, guys. I wish you all happy trading, and thank you so much for tuning in for the market snapshot. Till next time, I wish you all the best of trading. Cheers, guys.